Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. Mark, welcome back to the show.
Glad to be here. A lot to talk about. A lot going on. Exciting week. A lot of news.
Mark, do you still have a special offer for our listeners?
Yes, we do, at VRTrader.com. And again, we're traders, so let's emphasize that, VRTrader.com. I mean, we must have done 10 or 15 trades today. It's just to let you know if you're following our service. You go to our website and you enter the promo code at any one of our newsletters, 2021 half off, just as it sounds, 2021 HALFOFF. Get 50% off. Give it a shot.
Gold took a major hit today, Thursday, and what's behind that? Is it just a case of gold was getting too hot?
Well, we play this stuff technically, and it ran out of steam. A little uptick in the dollar, a little disappointment, I suppose, on the Fed meeting. But bottom line is it just topped out technically. Too many bulls out there. Everybody I know is bullish on gold. Every time I mention that I'm not bullish on gold, they hang up on me. It's like either you love gold or you're not part of the crowd. Meanwhile, we were trading the gold short this week, 2 or 3 trades using the inverse indexes for both the shares and for the metal itself. Did a couple trades. Wish we hung out around a little bit longer, but we were due for a bit of a correction. I think that's what this is. It is a shakeout. It is a correction, and we are probably going to see another rally unfold here. I haven't gotten confirmation yet of the bottom. Maybe it was today, but waiting for some volume and technical confirmation. But if you remember, I'm just going back months and months and months. I even last year I had said that for long-term research that I've done and with old friends of mine in the market from decades back, that 2020 could have been the high for gold, and so far that has been the high. And that was prediction of one friend of mine. In fact, Terry Laundrie made. He passed away, about 8-9 years ago. Terrific analyst, but back in the year 2000, he told me we were going to see the high in 2020 for gold. And sure, we had a big run-up in 2011 and a correction, but now we came back. And meanwhile, everybody got all excited, thought this was the move to 5,000. So the bulls are going to have to prove themselves. They're going to have to go through that high, whether it's this year, next year, or 5 years from now. Then I'll be more of a believer in the gold market. But just as a trader, I kept looking at that high last year and saying that may have been the high for a while, and everybody's looking for it to run. But right now, we traded on the short side. I think seasonality may save gold here, perhaps coming up, and there might be another long trade here. But how far we're going to go, Jim, I can't really tell you. We'll just take it a day at a time, and we'll play it. And the moment the market just got carried away with too many bulls looking for an upside explosion. They're using the story that the government's printing all the money and this and the story and another. I mean, there's been so many stories over the years why gold should go up, and it struggles to do so, unfortunately. So that's part of the problem with gold,
Commodities also took it on the chin. Soybeans down something like 8% today. What's behind that?
Again, too much bullish enthusiasm, fear of the strength in the dollar, I guess, concern that the Federal Reserve perhaps wasn't getting more aggressive here in raising rates. They've been putting it on the back burner. I think it's the same story with lumber. Lumber ran up, as you know, a few weeks ago, actually running for months, had a big shakeout. Everybody got excited about it. Nothing goes straight up. It's the force of gravity, Jim. I think that's really the answer. It goes up too much, it's going to have a correction, and doesn't mean the move in soybeans is over. This could just be a big shakeout, and that would be my interpretation. It's a temporary event, just like the shake we saw in gold here that we traded a bit, and it'll probably resume higher, but I got to wait for a technical signal. I didn't play the soybeans. We played the gold and silver.
Inflation. The U.S. Fed has said they may hike interest rates sooner than later because of inflationary fears. The government admits it's running at a record 5%. We haven't seen those kind of numbers for a couple of decades. Do you think those numbers are honest and that it's much worse than just 5% year to year?
You got to look at the chart, and you got to, use sentiment and a little bit of, contrary thinking. The street was on the side that the Fed had to move, and as I just mentioned a moment ago, they didn't. The market just got carried away to the upside, both in stocks, which we can talk about as well as the commodity market. And we experienced a technical shakeout. We don't know how long the Fed's going to delay in raising rates. They have the power to sit for a long time. There could be an outlier event that suddenly hits, which I've been talking about for quite some time. Much as we saw COVID, I think that was just the first of such events that are going to unfold in the months and years ahead. So we could get into a whole other discussion about that subject. So, suddenly another outlier event hits, and suddenly interest rates don't become the important subject anymore, as they supposedly had been. Oh, well, we can't raise rates now. We have another disaster out there, something else that's hit the planet. So whether it's a military event, whether it's a geocosmic event, whether it's a virus, something else is coming, and I'm pretty confident of that. So we were all not trained to wear masks or get vaccines just as a one-time event. I think this is preparation for something else that's coming. I've said that from day one, but that gets into a whole other discussion. But as far as rates are concerned, I'm just, we're here to make money in the market. If the charts are telling us that the markets are coming down, we'll play the short side. And I'm not going to sit here worrying about what Chairman Powell is thinking at the Federal Reserve or what some analyst at Goldman Sachs is thinking that interest rates should or should not do. Just got to react to the markets, and I think common sense says that over time rates probably will go higher. They've been down forever, and we're due for some type of upcycle. I've been saying this for a while, but there was a little uptick here in the rates. They pulled back, and we'll see if the charts tell us that the uptrend, that is higher rates, is in the offing. Common sense says it should happen, but common sense is not how you make money in the stock market.
Oil has done surprisingly well, at least according to some. Do you expect the upwards trend to continue this year?
A little bearish here. We needed a correction. Same story. We're talking about another commodity. We've been waiting for a pullback. It could be a much bigger one. Taking it a day at a time here as a trader. We're looking for a correction in some of the oil names, some of the ETFs, and we're starting to see that now. There might be even more of a correction coming. I'm going to wait for a technical signal. My overall big picture gut feeling is oil's going dramatically higher over time, much, much higher. But right now, we're just going to follow the numbers. So we got way overdone to the upside. We need to pull back. And, again, we're just watching the charts here. So most of the names that we have on our list, are under the market, waiting for, a bit of a correction. We were playing quite a few of the oils on the way up. We were playing oil last year after that big bottom. And, again, just waiting for another technical signal. So, answer your question, big picture, I think we're going a lot higher. We haven't gotten a confirmation of a little trading bottom here yet. Maybe it'll come tonight or tomorrow. We'll trade it accordingly, and we'll take it from there.
Bitcoin and other cryptos really took it on the chin recently. Are they going to be on their way back up and even soar to higher highs?
Maybe we should back up a second here. We've had a big change in all the markets, Jim. There's been a bit of a reversal pattern there. You just cited a few markets. We talked about soybeans. We talked about gold. We haven't talked about stocks yet. You just mentioned crypto. One of the prevailing events that overshadows all of this is the fact that we entered the summer solstice, and I've been writing about this in my newsletter. I've been warning that June 21st, we're getting close to the summer solstice. The markets tend to change direction around the equinoxes and the solstices. We saw the big change last March. Sometimes, we saw it last September. This time could be more pronounced, so markets reversed. And I think it's attributed to that. We talked about it in our newsletter. We have a big picture in our newsletter of all the positions of the season. So you have to be prepared for December 21st, March 20th, September 20th, and so forth. Around those dates, within a couple of weeks, markets tend to do some crazy things. So I think the summer solstice has a lot to do with this. We're still in the throes of that. And that, I think, was the overpowering event here, controlling the markets. We also had some solar activity this past week. If I can pull that up here for you, I had it in front of me. We had a solar wind that hit the earth here in the last couple trading days. It's subsiding now. It mainly hit strongly on June 15th, 16th. We tracked the solar winds, the various surges that occur. They're geomagnetic storms that come and head toward the earth. People don't talk about this. They talk about what's on CNBC and what's going on with the Fed. We're affected by extraplanetary events, including the sun. So I think the solar wind had something to do with this correction, along with the solstice.
We'll have more with Mark Leibovit right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Mark Leibovit. What's going on with the so-called ape army? Does APE stand for anything?
No, just the good old apes. In fact, I was out the store today buying some bananas. I might want to distribute those around myself. I'm a big psychological supporter of it. Well, basically, the ape army is the individual traders. Actually, there's military people. There was a big interview on YouTube I think it was yesterday. Steve Bannon, who was a former President Trump advisor, as you know, he had an interview with one of the leaders of the ape army. A lot of them are former military people. And there are people that have decided that hedge funds are evil in this world, and they've done a lot of things to destroy companies, put a lot of people out of work because they felt that they can make money destroying the stock and bringing it down, and ultimately, perhaps even, like I said, putting the companies out of business. So, there's a whole group that wants to put an end to this. Of course, we've seen big examples with GME, GameStop, and AMC, rallying big, the big short positions that are initiated by hedge funds. So we have a whole group of people who call themselves the apes. If you Citadel, which is one of the big players on the short side of the market, they're a hedge fund organization based in Chicago. They had some apes standing out in front of the headquarters there, handing out bananas. The last picture that I saw. But this is more than just a joke. I mean, we got millions of traders that are betting that there's many stocks, and we can spend hours talking about the list of stocks that are heavily shorted. A lot of rules that the hedge funds use are not necessarily rules that the average person follows or can follow. A lot of exceptions are made on the regulatory level for these guys, and they take advantage of it. And unfortunately, they put pressure on a lot of stocks. And the plus side is that there's opportunity if these shorts can be squeezed, which started to happen. We saw, and there's out there. The only thing that could stop all this is if the government gets involved. Like we had the long-term capital hedge fund collapse that Alan Greenspan saved back in the 1990s. And if some of these funds start to go under, which presumably could happen, their short positions are squeezed, and it could be trillions and trillions of dollars of losses. I mean, the kind of numbers that I'm hearing that could be out there. The government would probably step in and do something, either save the funds or do something to intervene in the market using the plunge protection team, which is that Ronald Reagan working group of financial markets that was created back in 1988. Something else would come in to stop that event, but the apes are out there, trying to make a case, and many even profitably, for making some money on the long side, squeezing these institutions. And from what I understand is most of the short positions are still very much there. Companies are at great risk of these hedge funds, that is, a great risk of blowing up. So, I would be supportive of a few hedge funds blowing up. I don't think they're doing the right thing. Sure, you can make some money trading, but when you talk about destroying companies, that's a whole other ball of wax. Very interesting what's going out there. I would follow the apes. I would follow, the Reddit. I would follow the Robin Hood group, and I would do some research, follow that on Twitter and YouTube, and keep an eye of what these guys are talking about in the stocks they're following, because you can make some money out there, on the long side if they force these shorts to cover. And many have, that I understand, really haven't done very much covering. They're very cocky and independent and arrogant and think that they're going to win. They may not win, and I hope they don't.
Mark, anything else we should be keeping an eye on right now?
I think we pretty much covered it. I would say in conclusion, I think the markets are in trouble this year. We've talked about this before, Jim. I don't think the correction we're seeing now is the end of the correction. My models are negative for the year. I'm a bear, so we trade up and down, all over the place. As you probably know, you go to VR Trader. I wouldn't be surprised between now and the end of July, the Dow could drop several thousand points. And if it doesn't, we'll adjust accordingly. But I'm thinking there's a lot of money to be made on the short side, and I think if you're an investor on the long side, you've got to be awfully careful here in the weeks and months ahead, and possibly into next year as well. But we follow the charts, we follow the sentiment, we follow the technical indicators that come up day to day. But our cyclical work, of course, is primary as well. But that would be my sort of bottom line comment here. We had a nice little break here to the downside in many of these markets in the last few days. You may get a little bounce, but if you had to, push me to a forecast, I would say between now and end of July, you can get a crash in the market. So stay tuned.
Mark, thank you so much for chatting with us.
Have a great day, Jim. Thanks for having me.
My guest has been Mark Leibovit, editor and publisher of the Leibovit VR newsletters, also known as VRTrader.com. If you have any questions for Mark or any of our other guests, you can send them to info@HowStreet.com, and we'll ask that question on your behalf. Find us on YouTube at Talk Digital Network. Find us on Twitter at HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.